every contract on Earth goes on blockchain. So if you're armed with a piece of information like this, you are stupid to bet against it. Why is it important in context of everything we've spoken about? Why did I get into crypto? I got into crypto in 2012-13 because I saw the financial crisis and the European crisis, and I knew that nobody owned anything. Because when you've got a collateral and leverage of 30 times or whatever it is, there's 30 claims on the same thing, so you own a 32nd of that collateral, right? So that means you get wiped out.
Only idiots will bet against the fastest adoption of any technology ever recorded in all of human history. These are the words of Real Vision CEO and co-founder Raoul Pal and the opinion of the hundreds of millions of investors that have taken advantage of this early stage of adoption. In a recent interview, Pal, a macro guru and staunch Ethereum bull, clearly explains why everyone should trust the process as the crypto market grows from its present $2 trillion market cap to an asset class worth hundreds of trillions of dollars. In his interview, Pal gives some insights into how fast the crypto space is growing, with the involvement of retail and big money investors alike. We are seeing sovereign funds get in crypto. We are seeing pension funds, asset managers, and a retail revolution, Pal states. Every contract on Earth goes on the blockchain. So if you are armed with a piece of information like this, you are stupid to bet against it. The former fund hedge manager explains that he got into crypto when he realized how flawed traditional financial systems are. The banks are heavily leveraged and anyone can easily get wiped out, Pal warns. He adds that Bitcoin, Ethereum, decentralized finance, and other aspects of the blockchain network provide viable solutions to the existing problems while creating monetary and economic value for all investors. Listen to Pal's thoughts on the entire crypto space and why everyone should get in immediately. But before that, please give this video a thumbs up and don't forget to drop your comments below. Enjoy.
So this is the fastest, and I say this a lot, but people don't listen. This is the fastest adoption of any technology ever recorded in all human history. We are at a point in time where we are seeing adoption at a scale that we can't comprehend. Stuff like central bank digital currencies is an adoption of blockchain as the predominant way of transferring value. We are seeing sovereign states getting involved in crypto. We're seeing pension funds, we're seeing asset managers, and we're seeing a retail revolution because retail front ran everybody. We're seeing a pace of innovation that is difficult to comprehend. And in a digital world, the value of goods goes to zero. Everything goes to zero in a digital world because you can make infinite amounts of it with Moore's law, i.e. the ability to increase computing power. And if you add edge computing and other things on top, it keeps it going. So what blockchain did was secure value in a digital world by creating scarcity. Okay, that's a big statement. And also, Ethereum created the ability for any contract of which everything, including me appearing on this podcast, is essentially a contractual term, which I agree with you over email. I will do this podcast, right? Everything, every contract on Earth goes on blockchain. So if you're armed with a piece of information like this, you are stupid to bet against it. Why is it important in context of everything we've spoken about? Why did I get into crypto? I got into crypto in 2012-13 because I saw the financial crisis and the European crisis, and I knew that nobody owned anything. Because when you've got a collateral and leverage of 30 times or whatever it is, there's 30 claims on the same thing, so you own a 32nd of that collateral, right? So that means you get wiped out. And so that was a trouble to me, plus the printing of money. And I know some people say it's not printing of money. I don't care the mechanism by which it works, but it works as a denominator. I've proven it. Those two things are big issues, right? The devaluation of your money and your savings, the fact that you don't actually own anything. So we go back to the Russia situation, doesn't own any of those dollars. So Bitcoin comes along, that becomes very, very interesting for solving what we are now seeing writ large. And Ethereum comes along and you've got this contractual terms and this kind of something you can build the applications layer. So they start building the DeFi world, which is decentralized finance, because you don't want the banks involved. Yes, because that's a problem, because the banks are too interlinked with the leverage in the system. And so then that doesn't function in the way it should do. Monetary policy doesn't work, hence why central bank digital currencies are coming. And I know people hate it. I don't care. It's happening. And they are going to use it for direct transfer payments. And yes, you will have a different rate of interest for different people because they want to penalize some people versus others. And people are going to hate it. It's actually more effective than what we've got now, which is really blunt tools of taxation and a monetary and fiscal policy. I think it changes a lot of that. I know that's a very unpopular view, but it is what it is. It's inescapable. What you need to do is maintain your privacy within that. And that is stuff like zero knowledge proofs and other things that are coming within this cryptography.
Pal also explains that there is enough evidence to conclude that blockchain technology will be the predominant architecture of the global financial system and the global system of value. This means its growth from $2 trillion to $200 or $300 trillion is pretty much assured. Listen to Pal's explanation of the network effect and things that drive adoption.
Big picture, right? We're seeing every single signal you would ever need to see to say this is going to be the predominant architecture of the global financial system and the global system of value and of all digital assets and of all contractual terms, which means it's gigantic and it's only a $2 trillion asset class. And therefore, if it's the same size as any other asset class, it's going to be 200 trillion or 300 trillion. But considering all equities and all fixed income, they're all going to go on chain as well. You know, it becomes the architecture of the world, much like the internet became the architecture of the world. This is the value layer of the internet and the contractual layer of the internet. The market is a exponential asset, and therefore you need to look at it in a log trend. It's driven by adoption effects, which is Metcalfe's law. So it's Metcalfe's law. Why it's so fast in its adoption? Because it's built on top of two other networks. The internet, that was built on top of the data network, which was mobile phones and cable. So three networks on top of each other produce faster effects every time. That's called Reed's law. So Reed's law is at play, with Metcalfe's law as the way of judging it, which is basically the number of people on the network and the number of interconnections and the value they transfer amongst each other. That is how digital assets work. When people say you can't value them, they're magic internet money, it's nothing. It's not true. It's entirely based on Metcalfe's law. It's entirely based really on the value transacted on chain in terms of dollar amounts and the number of people transacting. Those two explain almost all price in crypto.
The former Goldman Sachs executive also explains that the first stage of the adoption of exponential assets is always characterized by high volatility. He mentions that the same thing happened with Facebook, Amazon, Apple, and Tesla. As the network continues to mature, the volatility shrinks, making the space even more desirable for institutions and sovereign wealth funds. Here is Pal's explanation of how Bitcoin grows to become a pristine collateral reserve asset.
In a exponential asset, much like Amazon stock, which is and Facebook stock, you start early stage of adoption with high volatility because you don't know whether it's going to succeed. Are we going to get adoption or not? Then over time, the volatility shrinks, but the rate of increase continues to go higher in that logarithmic exponential trend. So to understand all of this, you just need to put up log charts of everything, and everything looks normal then. Same as it does for Google, Facebook, Amazon, Apple, Tesla, they're all the same. And they're all network effect businesses. Even though you don't know what the network effect of Tesla is, there is network effects that's built into that stock. So now we are down 50%. 2 standard deviations oversold versus that logarithmic trend, which is normally where the market turns around. So this should be normal price action within the trend. So that's telling you should be more leaning forward and saying, okay, I'm looking for the low. Is it here? Is it a bit lower? Blah, blah, blah. And I think we reached that low. Again, it's very much like equities. It's probably 60-40, maybe 70-30 in the case of crypto that we reached that low. Why? What is the next accelerant? Well, we know there's more adoption from institutions, governments, and everything else. What's happening geopolitically is another adoption factor. So that's interesting in itself.
Can you explain, can you unpack that a little bit, that mechanism?
Well, because if you don't own assets, you need to own an asset that nobody has a claim on. Bitcoin and all of crypto, there are no claims. So you own it. And it's proven ownership and you can store it. So that makes it very attractive for people who see what's going on, good actors and bad actors, to say, okay, I need this. Now, blockchain's not very good for bad actors because you can trace everything that everybody does, but it means that you're out of the system. So that is pretty powerful. Then for sovereign states, particularly sovereign wealth funds, they will look for a long duration asset of which gives them some security, so it has a place. So we will see a further adoption for sovereign states of this, not necessarily as a currency, but as an asset. So I think that is very, as a reserve asset, I think that's very interesting. I think that's the place of Bitcoin in the world, as a kind of pristine collateral reserve asset. We've got the sparks in place. The next thing we need is the inflation story to die. That would be a true accelerant, and growth to be falling and the central banks to be printing more money, because it does very well. It drives adoption. It doesn't just drive the price up like it does with equities and gold and real estate. It drives adoption, which is why it always massively outperforms everything else in times of monetary largesse. So you're setting up for a perfect storm here. Was it going to go lower before, blah, blah, blah? Right now, unlikely. there's a probability of it. It's still a decent probability, call it 30%, 35%, but I think unlikely.
After a week of bullish trends, Bitcoin, the world's largest cryptocurrency, dipped to nearly $44,000 into the March monthly close. Experts say the activities of some large volume wallets and some macro factors could have been responsible for the pullback. The coin has since recovered some of the losses and is exchanging hands at $46,300 as of press time. In the weekly chart, the coin managed to exit a rising wedge, a bearish pattern, but it also failed to keep the 50-week moving average as support. These are slightly mixed signals from the crypto, but analysts are positive that April will be better for Bitcoin and the whole crypto market. The fourth month of the year has always been historically successful for Bitcoin. According to data from CoinGlass, Bitcoin has never lost more than 3.46% in April, with increases as high as 50%. Hopefully, this month will be no different. Thanks for watching. Remember to give this video a thumbs up and drop your thoughts and observations in the comment section below.